What's up, Cashflow Contractors? Our last episode was on the Profit First system by Mike McCallowicks. And after going through that episode, we decided that we should record a series on cash, how to manage cash, how to have a cash strategy, how to create a cash flow forecast, how to use cash efficiently. So over the next 3 episodes, we're tagging on to this Profit First episode with 3 episodes with fractional CFOs. This episode that you're about to listen to is with Lisa Dionisio, and she's going to talk about a cash strategy for your business. It's a really helpful episode and helps you think a little bit differently about your finances from really a prudent and wise standpoint that will help serve you better as a business owner. I gained a ton of value from it. I think you will as well. She is actually completely against the Profit First system, and she'll explain why. I think it's still a valuable thing depending on the stage of your company, but she makes great points as to why you should move on from Profit First as you grow. So hope you enjoy this series on cash. If you didn't check out the Profit First episode, it might be worth listening to. If you're a larger stage company, this next episode with Lisa will definitely apply a bit more than Profit First. Hope you enjoy. Thanks for tuning in. Enjoy the episode.
The truth is, if you don't have the cash, if you haven't done a line of credit or you don't have a way to get like decent interest rate cash, then you're going to be up a creek if you're not getting enough upfront. I've worked with people that weren't even taking like a deposit. That was a game changer. There was just, if you're going to do a long-term project, is to take a deposit up front. Something I would caution people on is to make sure you have a cash cushion before you start growing and before you start hiring people, because you need to be able to have that dedication to manage expenses when it's just you doing the projects, and have some savings before you're bringing on other people. The biggest thing I say is get rid of your personal spending that you're running through your business, because people use their business account like it's just a free check card. Before you really start growing and expanding, make sure that you have control of your expenses and you are able to save that money, because you will need that cushion before you grow, for sure.
Today's episode is sponsored by OpenPhone. It's the perfect business phone system for contractors that you can manage just from your cell phone. If you're interested in hearing more about OpenPhone, check out the show notes to get an offer directly from them. The link is right here, and you'll find it down the show notes. Thanks for checking out today's episode, brought to you by OpenPhone.
Expert advice, practical tips, real-life stories. Have less stress, more time, and more money in your business. Welcome to the Cashflow Contractor.
Martin, I've been wanting to record this episode for a while. We just have finally gotten around to making it happen.
Yeah. Well, we'll be talking about cash, and really not very many of our listeners are interested, in
Oh,
cash.
yeah. They hate cash. Yeah. It's not even worth it.
So I don't know, but we're running out of topics. I guess we'll go ahead and talk about it.
Well, Lisa, welcome to the show.
Thank you. I'm excited to be here.
Long-time listener, first-time caller, right?
That is right. That is right.
No, I've known Lisa for, a while now. I met her when I coached her son. He was like 8 or 9
Yeah.
years
You
old
had
in
dreadlocks
soccer.
then, Khalil.
I did have, lived a lot of life between now and then. It shows too. No, but it wasn't until, I guess, probably 4 years ago, maybe, that I really understood that you were a CPA, that you don't do taxes, but that you really help with the financial aspect. Why don't you give a little introduction to Paxis CPA? What do you guys do?
Sure. So as Khalil said, I'm a CPA, but I always follow it really quickly to say, but I don't do taxes. Else, usually people follow up with a tax question when you say you're a CPA. I did taxes for years. But I started, when I moved back to Oklahoma, I had several friends that opened businesses, and they just were asking me for help with getting their books set up and helping them make financial decisions. And so I was just helping friends, and then they just kept referring me to other people. And before I knew it, I had a business, and it wasn't anything I really set out to do. But I love it. So I work with entrepreneurs, and I help them. I've got several accountants that work with me, and they get the books clean and ready, and then we use them as a tool to help business owners make decisions.
Yeah, it's great. And that's what Martin loves, is when people work with people like you, because it's just a different level.
I love that there
business.
are people like you to straighten them out, because they've got to be straightened out, and that's not my bailiwick. That can
Yeah.
be pretty tough.
Well, I always say people are like, "Oh, our books are a mess," and I was like, "If people had clean books, I wouldn't have a job." So, I'm used
Yeah.
to seeing books that are in disarray.
Yeah. Well, speaking of books that are in disarray, we have a controversial topic to start with. We're in our cash series, and we started in episode 1 of the series talking about profit first. And you hate profit first. So for those people that have spent all this time implementing profit first after one episode and they're rolling on it, can you destroy their dreams now?
I'm not going to destroy all their dreams. Just the dream of having many bank accounts to reconcile and to transfer funds between. I do believe in pulling out money for taxes and setting it aside in an account where you don't see it, so you're not surprised. I've seen that happen to several business owners. The part of profit first that I struggle with as someone who does the bookkeeping on the other side is when there's so many accounts, and most people lean to profit first when they're not making money because they're like, where's my profit? Where's my money? And when you're really lean on money and you have that many bank accounts opened, it's just a constant transferring of funds between accounts because payroll doesn't have enough. So you're transferring it from operating, and it's so on the other side, as we're trying to like navigate these transfers, it just creates a lot of work. And it's a lot of time on the owners just kind of spending like, hey, I don't have enough money for this next week. I need to move it. And so I have like kind of a modified version of profit first that I recommend to people. But the way the book is written, I think it's way too many accounts.
Yeah.
Yeah.
And you,
Not
Martin, you
only
saw
the
that
ones
just
that
recently, right?
What's that? Oh,
You saw that just
Yeah.
recently?
yeah. I had a guy come to me. I've seen a lot of people try to replicate books in Excel spreadsheets, right? Like I'm doing my own books. I was like, well, actually you're not, but he, every bit of information a guy wants, but he created 9 new bank accounts to move money around. And then he has an app that you can buy, and I don't remember the name because there's no need for me to remember the name. I'll never recommend it. But it makes it connects with your bank, and you set up, I want 70% of my income to go to this. And it goes over there. As soon as it hits over there, 30% of that goes to anyway, it just
auto transfers.
automatically populates all these 9 accounts. And
Wow.
like Lisa said, if you don't have enough money in payroll account, you go in there and manually undo it. So anyway, just books work. They have a little effort to figure them out, but they work.
I think you're right,
I will
Lisa.
say it's a takeaway from profit first is save for taxes. And then if you need to pull your profit, you can pull it, but just keep it. Cause as the business owners, if the business is short on cash, you're the one to put the money back in. So,
Yeah.
Yeah.
Yeah. I think you're right that it's probably most sought after when you're not doing well with cash in general.
Yes.
But I think it could be, I think for a solopreneur, like one man shop, it probably is a valuable thing just because your expenses are so low that you hopefully, fingers crossed, don't have to worry about transferring so much, but it just helps you to, I'm setting aside for taxes. And I'm trying to save, to have a dedicated savings account with our profit account and et cetera. But whenever you start thinking about like all the different expenses that could come up, and it gets really mind boggling. So, well, we brought you in to talk about strategy with cash. And I thought we could start with Martin because a cash strategy, I think, should probably follow just a general business strategy in some sense, in terms of what are you in business for? And you have a great piece, Martin, on the objective purpose of business and the subjective purpose of business. What is the objective purpose?
Well, real quickly, right before that, I heard a hedge fund guy from Connecticut, Stamford, Connecticut, that we sold a company to, giving a talk, and he said, if sales and profit were food and water, cash is oxygen. Because you can live for a long time on sales and collecting sales and then maybe making a profit, but you can't make it past Friday without cash. And so that's the impetus behind it. Getting to your question just a second here, the other thing is that I'm sure Lisa has to do this all the time. Profit in your company and cash flow are not the same thing. And they're almost don't have anything to do with each other. They do, because if you don't make a profit, eventually you'll run out of cash. And if you make a lot of money, you think maybe your cash would build up, but they're just different creatures. So then to directly answer your question, I think people have heard it, is that there are as many subjective reasons to be in business as there are business owners. To prove your high school sweetheart was wrong to not marry you, or because you want to help people, or because you don't want to work with, anyway, whatever it is, there you can do that. But the objective purpose is not sales, it's not margins, it's not profit, it's not profit. It is to turn cash into more cash. Because if you go all the way down to making a great profit, but you don't collect, or if you don't collect soon enough, you can easily be out of business. So that's it. The objective purpose of business is to turn cash into more cash.
So
hopefully Lisa
what I
would
was
agree
thinking
with
about yeah, I think she does. She was nodding her head. I think where this applies in terms of the subjective informing your strategy a little bit, there's general strategies just to like be a healthy business, right? But you probably have a purpose for starting. Hopefully you have a purpose for starting your business. Maybe you wanted to be your own boss. Maybe you wanted to do something in the community. Like you said, Martin, there's subjective reasons, but know why you're in business. We've talked to people before that essentially have built a high risk job for themselves and they became an electrician, but they don't really like being an electrician. They did it and now they want to do all these things on the side. Well, why not work for someone else and not take on all this risk where you have to meet payroll and all the other things that come with being in business, and just be an electrician, do those things on the side. So that's kind of one thing. The next thing is a lot of times people maybe start a business and then they pull money out to fund different ventures. Maybe they're trying to become a real estate investor. You need to be wise in how you do that because you can end up taking on debt in your business and then having cash that you go and invest in real estate, and it can get messy, right? So I think it's important to start, like with any strategy, why are you doing what you're doing? And then let's talk about our cash strategy, right? Quick ad break, or really a segment, to share with you a conversation that we recently had with Sergio Garcia of Alpha Surfaces in Oklahoma City. Really, it's a great conversation that captures the essence of what we're all about here at Growth Kits and at the Cashflow Contractor, which is helping contractors be more productive so they can have less stress, more time, and more money in their business. Rather than hear from me, let's just listen in and hear Sergio talk.
How do you come up with that idea? Like, that's crazy, man.
As a business owner, you try to find ways to give value, right? So just understanding the pain and trying to find ways of solving that pain. And then some of it was just scratching my own itch. I mean, I had these problems too. So that's how I got Gabby. And then I had 2 executive assistants before Gabby, and it just didn't work out. And I realized that I was the problem and that I needed to have a better onboarding and training system in place. And then I realized, well, that's what everybody else has the problem with. They try things with people in person or overseas, but they don't actually have a really good onboarding or training process. And so it doesn't work out. And so it's about having a dedicated process to help someone succeed and manage them and, all that different kind of stuff. So yeah, I'm glad it's been valuable for you, man.
This is crazy. I mean, I told everybody, like, I know a towel setter. He's an American guy, and he partners with a Mexican guy. They've been running, 5 crews right now. Now they're doing, big constructions. And I see that pain every time I talk to these small contractors. I see me and them. Man, I can't do this anymore. My mind's just going crazy. And, overweight because we eat whatever we can because we don't have time to work out. We don't have time to, man, it can't be that way. So when I started working with you and Martin, and it just opened a new world. Now that you're showing me all these tools for my business, and Vicky showing me all these new, open phone and, the CRM, that was one of the problems, man. I mean, the CRM was great. It's a great tool. I just didn't know, it was you're also overwhelmed that you think, oh, this shit doesn't work. You're the one that doesn't work because you're too crazy busy doing a bunch of little things.
Yeah.
And man, I think you got a great, and it's so noble too, man, to be honest with you, because you're helping a sector of nobody cares. how to say this? Like you help in a sector where, like, if you're a company that sells 100 million, everybody wants to work with you. Everyone wants to find value to you, right? But nobody cares about the guy that sells 10 million or 5 million, right? Nobody cares about them, and they're struggling. They're losing their family. They're losing their mental health. They're losing physical health, and they're losing their passion for business. Natalie told me the other day, she was like, Sergio, you're back. And I was like, what do I mean you're back? She's like, you're back. Your fire is back. And I was like, what do you mean? She's like, you look happier. You look engaged. And I didn't notice that until she mentioned it. I was like, that's before you guys, like before and after.
Yeah.
So I feel that's super cool that you're looking into this, into us, like the small contractors, man. It's amazing.
Yeah. Well, that means a lot to me, man. I really appreciate you saying that.
We loved working with Sergio. We'd love to work with more contractors like him who know that they're capable of so much more, but they're overwhelmed by the day-to-day, by the admin, by just not having the support they need. And I think an owner's assistant can truly transform the way that you operate your construction business. If you're interested, link down below, and we'd love to hear from you. Schedule a roadblock call, and we will outline 5 clear ways that an assistant can completely change the way that you work in and on your business. Back to the episode. Lisa, you were talking to us before. When you think about cash strategy, you always say that you need to really understand your numbers and where you currently are, right?
Yes. And I'll kind of speak on that. And Martin and I had a debate on this a while back. But and what happens is usually when we get brought in is when people are trying to figure out if, they're showing profit, but they don't have cash in the bank. And it's what happened. Why am I paying taxes and there's no money in the bank? And so there's different reasons why that is. But, one of the main ones is if they've got receivables and people aren't paying on them. So the cash isn't coming in the door, even though the sales are there, that there's no cash. I've seen this with some of my clients that have a lot of machinery and equipment as they've been buying equipment. And so it's until that depreciation comes in, they've got the net income on the P&L, but they don't have cash in the door. And it's hard to be able to grow, to be able to invest in your business if the cash isn't there. And that's where I think a lot of times the people get into issue is when it's a growth phase and they're wanting to like reinvest in the business, grow the business. And then they've got good momentum, they've got good sales, but they just don't have cash.
Okay. So maybe walk us through how you get into that situation. What are your steps for just assessing the financial health of that business when you step in?
A lot of times, like the low-hanging fruit is the receivables. That's, is making sure, and especially if people are doing like a percentage of completion, is making sure that as they bid a project, is that they're aligning the percentage and the payments that they're receiving with where their costs are. If majority of their costs are on the front or middle end, they need to make sure that they're collecting the money sooner, so they're not floating the cash to the business for everything up until the close of the payment there. So just kind of making sure that their work process aligns with where their expenses are.
And that's just the deposit on a project, right? Like that's whenever why do you think, well, do you have any examples of situations where it's
let me give an example. That's an idea, Chloe. It's building a pool. So if you own a pool company and you're having to rent a backhoe to dig a hole in someone's backyard and then get the concrete poured, you've got a lot of costs from your business that is invested in that pool. Whereas on the back end, like the finishing and getting the tiles in and getting everything done is not as cost heavy as what the front end is. So making sure that you're getting that, it might be that kind of towards the middle of the project that you're getting 60, 70% collected. And then you might have a bit of a span and then have a larger final collection. So there's a little break there, but that you're getting money in the door. So you're not having to float the business, the cost of the backhoe rental and the cement truck for the entire time that pool is being constructed.
Now,
and most of the people that you work with, can they pull that off? I mean, do they get that?
That kind of goes back to what we're talking about, know your numbers, is you've got to know where your costs are and what you're spending. And we have seen, I've worked with people that weren't even taking like a deposit. And so that was a game changer. right there was just, if you're going to do a long-term project, is to take a deposit up front. But yes, I have seen it done, Martin. It is hard. You just have to be really on top of it.
I think as a takeaway from this, we have yet to do most of this podcast, but that is a major league. I can do that. As soon as you're through listening, go figure it out. Something they can do is to adjust your deposits to your upfront, adjust your work schedule to your cash flow. I think that's brilliant. And I know most people don't do that.
Yeah, I think you just even have that schedule of the costs, knowing what you need right up front, and then maybe even taking a larger deposit, not like absurd, but a little bit more just in case something goes wrong or whatever on the deposit. Martin, I'm curious, and maybe Lisa, you can speak this too. Why are people not collecting the deposit to begin with?
Most of the guys I know that I work with are. I do have one, he's not really a client, but I advise him on some things. I have a company in Tulsa who builds pools, and he takes 10%. As a matter of fact, I think $3,000 or something like that, and builds the whole thing. But he's got a lot of money, and he kind of uses that as a competitive advantage. Mm-hmm. He hadn't got whipped on it, but kind of like, no, I'm going to take, implying that whatever people's minds might run to, giving a deposit to a contractor. Other than that, everybody does do it. What they don't do is what Lisa talked about, is try to match the in to the out. And I think that's a great idea.
Yeah,
I think the main reason people don't do it is, as Martin mentioned, this is competitive advantage, is they're worried that they're not going to get the sale. And so it kind of comes where, and that could be a sticking point for sure.
Yeah. And I think the reality is you just have to face that situation as, well, am I so needy for this sale that I want to go through the stress of not having cash later and potentially going bankrupt or potentially having to take on terrible debt to be able to fund things, which would you rather have, right? And the reality is, Martin, most of that's head trash anyways. Like, people are pretty okay with the fact that they have to pay for something if they want to get started. If they're a good customer anyway.
I've got a client.
If you have a good reputation and you can say, like, this is, I work this and this is our process, then you can get away with it. But I think it's when you're starting out, if people don't know you, if you don't have that reputation, then that's it. That could be a hard thing. Okay. But the truth is, if you don't have the cash, if you haven't done a line of credit, or you don't have a way to get like decent interest rate cash, then you're going to be up a creek if you're not getting enough up front. Right.
You're financing your customers is all you're doing. Yeah.
You're giving them a loan, essentially. Yeah.
Mm-hmm. Okay. So there's some low-hanging fruit there. Start taking higher deposits or deposits at all if you're not. Look at your accounts receivable, which essentially, if you're not taking deposits, is probably pretty high. What else is there on the kind of low-hanging fruit side?
And this is kind of more about pre-planning is, I always say, get a line of credit when you don't need it, because when you do need it, you're not going to be able to get it. And so it's just making sure that you have access to cash if something does happen where, someone stiffs you and it doesn't pay you and you're out those fees. And there's different ways, and we can talk about that later if you want to, Khalil, in terms of how to go about getting a line of credit. But I do think that that's, it's nice to have that in your back pocket. It gives you a little more flexibility.
Okay. Gotcha.
I kind of like to talk about that now if it fits.
Yeah, let's talk about it. Go for it.
Because Lisa, I'm going to ask you what you think. If you're starting out, you're a pretty new contractor and you want to go get a $100,000 line of credit to float things, you're probably going to have to put up your house. Mm-hmm. You agree?
Yes.
So
yes, I do.
What is it? What do you, when you're talking to people, that's a very personal decision. One of the things about it is if you decide to do it and it's your house, it's your money. It was your customer's money before that. But if you're going to do that, you really need to understand cash flow and not be all tickled because you got $125,000 in the bank. 100 of it's from a line of credit and 25 is from a deposit, and none of it's yours, right? But if you spend it, if you blow it,
I always say, just get the line of credit. Don't pull on it, but it's
right,
just
there
your
you go.
safety net. It's not, you're not going to have it in the bank, but it's just there in case. And I think especially this comes to when you have payroll and you have other people's livelihoods depending on you, is as a business owner, that's your responsibility, is you have to have a way to pay your people. And if you're running that tight of a ship, if you don't have that cash cushion, and that's something that we're going to talk about also, is that cash cushion enables you to be able to make better decisions for your business. But if you don't have that cash cushion, you've got to have a way to pay your people if the money doesn't come in from the customers.
Right.
Yeah. Martin, and Lisa, you can speak to this too, the collections process, not just on the deposit, but just in general, has to be a lot faster if you're going to have a good cash flow. And then also, you need to make sure that you're sticking to your schedules that you estimated on and not let projects go longer than they need. Maybe let's like dissect why that's so why that matters. So both of those things matter so much.
Well, why do they get off schedule? Weather and every other kind of thing, right? Stuff happens.
Right.
But generally, I was speaking to my good friend contractors, and I've got two in mind, and they'll know who I'm talking about. Generally, you bit off more than you could chew, right? And if you approach jobs, have a plan, you collect the cash, you know your costs, so you're doing things right, and you keep it small, and you manage that job, and you actually make a deposit that actually has gross profit in it, and Lisa sends you your financial statements, and not only did you make some money, but there's some money in the bank and it belongs to you. And do that a few times. I think if this is answering your question, Khalil, but do that a couple of times, and you've learned how to do it. You've built up some reserves, and you hire some help. Yeah, maybe you had one guy, but but then you get good at that. But you build into it. And what I've seen, Lisa and I had a mutual client a few years ago, and he was really at the place where he should have done one of what he does. And he jumped out, he's got 8 going, right? Doesn't have the personnel and subcontractors were doing things wrong because there was nobody there. And then, who's going to pay for it? And just start and get control, right, Lisa?
Yes.
And know that you have it.
And I do think that there's a difference between when it's a one-person shop versus when you're growing and you've got a team. And there's a difference and this is something I would caution people on, is to make sure you have a cash cushion before you start growing and before you start hiring people, because you need to be able to have that dedication to manage expenses when it's just you doing the projects, and have some savings before you're bringing on other people.
We talked about that the other day, but and I get it every client. How much is enough for that reserve?
Yeah.
What are your thoughts?
Let's talk about that.
3 months of operating expenses is just kind of my fat sum of it.
And can you define operating expenses for our listeners?
Yes. So, and Martin was kind of asking me, is it your cost of goods sold, or is it just so when I look at operating expenses, I'm looking at what is kind of below the line. That is your overhead, it's your insurance, it's your rent, it's your auto payment, everything, payroll. If you've got people on payroll that aren't, that are managing the office, that are not out there doing the service. So it's just the below the line expenses.
And okay. And so that it's including yourself and the draws that you take as salary or whatever right? So because that's part of it too, right?
Yes.
Okay.
Yeah.
So
You've got to
3
pay
months.
yourself also. Yes. And a lot of times, not to get technical and be the tax nerd that I am, but your draws, a lot of times you don't see them on your P&L. And so that's something to keep in mind. If depending on how you're structured, your draws are going to show up on the balance sheet. So you kind of always have to factor that in when you're looking at what your operating expenses are.
That's a question to ask you, Lisa, too. I've encountered a lot of business owners don't take a salary.
Yeah.
Do you see that? I mean, it's kind of like kidding yourself. I can take draws when I need it. I said, no. if you've got a profit and you're not taking a salary, you don't really have a profit because you're working for free. But I take draws, but like you said, it's not on the P&L. Do you ever run across that, or
Well, so,
most of your
if
guys
you're an
pass
S
that?
corp, they can have wages. They can pay themselves as an employee, but they have to be an S corp. Or if it's a partnership, they could do guaranteed payments. And what I tell people is a lot of times people will do the draws, but I try to tell them just to be regular with their draws. And so then when we look at their budget, the amount that they're pulling as a draw every month it's in the budget as something that we're accounting for. But it just doesn't. A lot of times people get real excited when they see their net income, and say it's 20,000, but they're forgetting that they pulled out 5, so it's really 15.
Right.
It's just an easy thing to forget.
Yeah. Okay. So let's walk through like the basics of that, like small tactics that you can use to save that first 3 months. What are things that you're working with clients and like actual advice that you give? Hey, cut this, look at this area to save. What are some things that you typically see, Lisa?
The biggest thing I say is get rid of your personal spending that you're running through your business. Because people use their business account like it's just a free check card. And so it's like have a business card and only use it for business expenses, else you don't really have a true idea what you're spending on your business. And that kind of goes back to we could call the theme of this episode "Know Your Numbers," because you got to know your numbers. You got to know what you're spending. And if you're running every trip to 7-Eleven where you get a slushie through there, then you're not really going to know what it's costing to run your business.
Yeah. And I think let's break down know your numbers a little bit, because I think sometimes for people that can feel, well, I don't want to talk to my accountant, I don't want to open up QuickBooks. But like, what are the numbers they really need to know? I think the costs we've already mentioned, like know what your real costs are to get the right deposit amount. But why don't you walk us through some basic numbers that everybody should know?
Yeah. And it's this is a little more difficult than talking to one client because there's a bunch of different industries that I'm kind of thinking of.
Sure.
But I'll give an example. With COVID, working with one of my clients is we separated out their cost of goods sold, like what products they had to buy to deliver their service. And as we were looking, and the cost was an electrician, and the cost of wire was going up, and it was just crazy. And I had this conversation with him. I said, "You have to raise your rates, else you're not going to make it." And he's like, "But I'll be the first to raise my rates." And I said, "Yeah, but you'll still be in business when your competitors won't be." And it was just kind of a game time decision because the cost of goods sold escalated so quickly that it threw the numbers off. It threw the profitability off because the increase was really, and it was I gave the example of wiring, but it was across the board. Everything was costing more, and of the
Yeah.
supplies they were having to order. So just being aware of it, knowing what, the fact that they were able to see month over month that what their cost of goods sold were, and just to see the increase, the trajectory, gave us a heads up about needing to make price adjustments.
Hey, you. Yes, you. Please take a moment and subscribe to our podcast. If you're getting value from what we're talking about here on the Cashflow Contractor, please do us a favor and just click subscribe. If you're on YouTube, click subscribe. Apple Podcasts, hit subscribe. Spotify, hit subscribe. And if you want our weekly newsletter straight to your inbox every single week, click subscribe down in the show notes. Really, really easy. I know that you're probably listening while you're driving from job site to job site, or you're working on something in the office or at home, or you're mowing the lawn, but just take a second and subscribe for us. It would mean the world to us. We know that you're trying to build a profitable construction business that operates without you. We're trying to build a profitable podcast that operates with us, and you're a huge part of that. So please subscribe. We'd love to help you even more and help other contractors find our content as well. We all do better when we share what works. Thanks for listening. Let's get back to the episode. So, Lisa, we've talked about COGS. We've talked about knowing the cost of your project, having the adequate deposits, but let's talk about overhead a little bit. What are the challenges with overhead? How we manage our overhead a little bit better for cash purposes?
Yes. So in terms of knowing your overhead, the importance of that is so that when you bid a project, you can also make sure that you have enough profit at the end to cover your overhead. And then in terms of overhead and managing it is just evaluating like what you're spending your money on. And one of the things we were talking about is subscriptions and technology. And, a lot of times those apps that we use, they increase their price every year, and just kind of evaluating and making sure the apps you're using, you're getting the most benefit from. Because it's really easy to have those creep up, and it just increases your overhead, and you're spending more than you're getting the benefit from on those at times.
Yeah. So really quick, we'll come back to subscriptions, but as far as allocating overhead to gross margins, which is
Yes.
Martin's favorite subject, we won't get into the details of how many discussions we've had about this, but how practically, how can someone do that? What is the best practice that you're showing people?
Yes. So it's first just to know what your below the line overhead, like what your expenses are to run the company. And if, let's say it's 20%, when you bid a project and you were saying that you're going to have, you've got your sales price, and then you've got all of the goods that go into it, you've got your labor, and you're looking at having, a 30% profit margin, as you need to know that at the end, you're going to be left with 10% profit, because you're going to take that 30% profit margin from that project, and then you've got your overhead of 20% that is going to need to be covered. And just knowing what your overhead numbers are, so that when you bid those jobs, that you are making sure you have enough profit from each job to cover your overhead.
Yeah. I think a lot of people have that realization where they end the year, net profits 4%. And they're like, what happened? I was 50% gross margin. I've had that conversation with people, and it's that overhead.
Yes.
And Martin, we've talked about this before, but you're all about see if you can avoid adding overhead at all costs.
Right. I'm working on this with 2 clients right now. It's our main focus is getting overhead down. And when you first look at it, people always say, well, I need everything. Really the time to control overhead is when you're bringing expenses on, hiring people, or just don't do it, because it's a lot easier to not do it than it is to get rid of it. But there are people, when you spend the time, and it doesn't even occur to you immediately, or to me anyway, but when you spend the time, things start going, hey, my copy machines cost $250 more each month than my buddies, right? Well, anyway, you just start finding things. Insurance, I've got great insurance friends, but so you got to look at insurance because it multiplies on you. And one of my favorites, well, it's not my favorite, but it kind of is. People have people working for them who are kind of legacy employees, have been around a long time, kind of don't really know what they do. They help out a little bit, but it costs, let's just say, $50,000, which is not a lot of money. That's not a high salary. And that person leaves. They don't want to let them go, but that person leaves, and then they tell me, I got to bring them back. I go, no, we're going to go 3 months minimum, because you just added 50,000 to your bottom line if you're above break even, right? So, but overhead is tough to get down. So don't get it up in the first place.
You mentioned legacy employees, but honestly, the same can kind of go for legacy clients. Obviously, I know that in construction, you're doing projects, absolutely. But sometimes you have the legacy builder that you work with, and you give him a deal, and he's used to a certain price, and you're scared to raise the price on him and all this stuff. And that can really shoot you in the foot too.
Yeah, no, great point.
Yeah. So
100%.
So back to the subscriptions that you mentioned. I literally just went through this, looked at year-end financials, and looked at all my expenses. I literally have the spreadsheet like in the next tab over. But I think I'm going to end up reducing it by, close to $800 a month just on subscriptions.
Really?
And subscription is probably not the right term. Recurring expenses. One of them is my cell phone line. I was paying for this, plan that automatic upgrades, all this stuff, but I haven't upgraded my phone in like 4 years, and I'm fine with it. But I was paying like $40 a month for that. Well, I dropped it, right? I was paying for, I have 2 different iPads, one for me that I use for work. I need the data on it. I have one for my daughter. I don't need the data. Maybe when we fly to Morocco next time, but I'll just add it whenever that comes up.
Yeah.
Well, there's $25 a month. A big one that I think is really frustrating to me, but I'm the owner of the business. I buy software that really my employee is going to use. I'm not the one I need to maybe access it, but I don't need to use it. Well, because I'm the owner, I have to have a paid seat, but then I've got to have a paid seat for them. So now I'm just like, okay, we're going to change from like me being the owner to our info email being the owner. The employee logs into that, and then I can be able to access it, but I'm not using. I need to access the billing. I need to make sure it works. If they leave, I need to access it. And so that saves me a seat. Well, I've done that on 3 different softwares that accumulate to probably $120. And so it just adds up over time. And those are the things that if you're not paying attention to, you're absolutely going to have really high subscriptions. So
the other thing I've noticed is that a lot of times companies will start and then they start adding features. And so I've been able to use features that are already in some of the subscriptions I already pay for and then get rid of ancillary ones. So just because our CRM that we're using keeps adding services. So we're able to kind of save some that way. It's just to take advantage of all of the services offered by the subscriptions that you're using instead of having singular ones for each thing you need to do.
I think we did that, Martin, for you, and I did it for me at least. I was paying for Zoom, but I was paying for Google Workspace. And Google Meet has improved vastly since when I first joined Google Workspace.
I'm still paying for Zoom so I can get rid of it, right?
Yeah, you can. Let's cut your overhead, Martin.
Yeah. Well, I mean, no, I report. Oh, no, we don't need to go. Something that you're talking about, when you're talking about subscriptions, I know there are people out there going, "Ooh, $800 a month means something," but other guys going, "Hey, so I save $10, $14." No. What we talk about all the time, one of my favorite statistics is if you can get your gross profit margin up by 1%, the average company will get their net profit up 14.5%. Okay. Well, how many subscriptions do you need to drop to save 1%? It's always little things. Now, anyway, you're not going to do all the math on that, but it's little things. Very seldom are there big things.
Yeah. Okay. So dropping the overhead, subscriptions, not taking on new overhead just to do it, waiting, forcing yourself to have some discomfort through some of that, not going for the easy route. Anything else on overhead that we want to talk about? I think what I was trying to get at earlier, which we didn't really touch, about project timelines and accurately estimating them, and this applies to overhead in my opinion, but your overhead usually resets every month depending on what it is, unless it's like an annual expense. And if you have that project timeline go 3 weeks over from what you estimated, well, you are going to have another round of overhead that goes on during that project life cycle. And it's going to hurt you, right?
Mm-hmm.
So I know that's a big one that you focus on with like builders, for example, days to build or days, what is it, Martin?
Yeah. Days to
completion,
build.
whatever.
Yeah. Completion date. Yeah.
Yeah. If you can get that down, you can save a lot of money because your overhead doesn't reset.
Got a little article about how to build houses for free. And we had a guy, builder in Norman, and he got his his variable costs actually down 10%. We did the math on that 10%, the average price, and he built like 70 homes last year, and he saved enough to build 6 homes for free. Wow. I mean, he had to pay for them, but he saved enough that his profit manifests itself as 6 homes. That 10% on the homes he did build was enough to buy 6 homes that he didn't have to pay for. He paid for it with savings.
That's really cool.
Yeah. Very cool.
But that's stuff people don't. It's available for everybody, but they don't think about it, and it's little stuff. So anyway.
Yeah. Okay. So these are ways that we can save, get to our 3-month cushion. What do you do from there? What, like cash strategies to get 3-month cushion, then I'm into growth mode? What are the things to think about, Lisa?
Well, and I wouldn't necessarily say that, once you have a 3-month cushion, you're into growth mode. I would say that once you have a 3-month cushion, you kind of have room to dream a little bit. Like if there's something you want to implement, something you want to try, is you've got the flexibility to do that now. And I feel like growth mode could be like a whole separate podcast, because that is like, as you go into the next stage, there's so many things to think about and talk about. But I definitely would say that before you really start growing and expanding is to make sure that you have control of your expenses, and you are able to save that money because you will need that cushion before you grow, for sure.
I like that you said you can dream a little because you're finally sleeping.
That's true.
You got
You can sleep at night.
enough cash that you actually sleep at night.
Yes, yes.
Quick ad break to tell you a little bit about OpenPhone. If you're a contractor that has a single cell phone, you're probably inundated with text messages and phone calls, oftentimes that you can't be responsive to or that you can't answer at all. So what's the solution? You can buy another office line with Verizon or AT&T, and you can have an iPhone that is passed around from employee to employee, depending on who's on call. But what if there's a better way? What if there's a way that you can have all your phone calls recorded to go back and listen to later, transcribed with summaries so that you can get a quick glance at what happened during the phone call, and even connect it to your CRM where all your other customer information is? OpenPhone is the perfect solution because it does just that. You're able to add all the users you need to for whoever needs to have access to the lines for your company phone. And then you can also find all of the information you need at a glance with a centralized location for all phone calls and text messages with your customers. Whether it's for marketing, for sales, or for service, OpenPhone is the perfect solution for you and your team. If you're interested, we have an offer down the show notes from OpenPhone. Please click the link down the show notes, or you can see it here on your screen to be able to find more information about OpenPhone. Thanks for listening. Back to the episode. I'm curious, if you want to prevent having this cash crisis, what are some things that we can be looking at and monitoring regularly to see how we're going to have a cash crunch coming up or whatever it is? We may be dipping into that 3-month cushion. What are the early warning signs?
Well, and I mentioned this earlier, it's if you're not able to collect on the work that you've done, that's a huge one that will impact you. So, looking days to collection, how long are your receivables out there? And there's a lot of people are very reticent to take credit cards because of the 3% fee. And I'm not a fan of it, but if your collection cycle is really dragging on and you're spending a lot of your time trying to collect, then you need to evaluate that 3% might be worth it to get paid when that job is complete, when you're on site and you've got the money in the bank at that point. So I just think that that's kind of something that business owners need to think about.
Yeah, absolutely. I think with the credit card, in my opinion, I'm willing to pay $30 to get, my cash, right? So if it's $1,000 transaction, I'll pay, sure, take $30. Okay. And now I've collected, I don't have any AR. Now I'm charging 10 grand, 12 grand. Okay. We probably need to do ACH.
Different story.
What can you do to make it feasible for someone to pay 12 grand? Can you make it separate payments of, hey, there's a good deposit of 30% or whatever it is? I think another thing to consider is, hey, this is the cash price or the check price. Here is the credit card price, and charge 3.5%. So that now
and a lot of the processors now are when you email out an invoice, is you can pay with ACH or you can pay with the credit card, but the person using the credit card pays the 3%.
They give that option.
Yeah, which is really nice as the owner. And some people have great benefits with their credit card, and they would rather pay that 3% and get their airline points or whatever it is they're building towards.
Hey, let's. I didn't know about that. How does that happen where you can push the fee over? I know we've got people that will want to look into that. Do it.
Yeah, it depends on who your processor is. And so I don't believe that QuickBooks has rolled that out. Anchor has. They're kind of a boutique one.
Stripe, maybe, hopefully.
There is some functionality in Stripe that you can customize it. It doesn't really come out of the box, but you can do that. I think if you just search like pass on processing fees through credit card, you're going to find so many of them. Anchor's one of them. I'm forgetting the names of the other ones, but there's a handful out there.
I don't want to misspeak and say.
But just Google it, and we'll put a link to Anchor in the show notes, and we'll put maybe a link to a couple of others for listeners as credit card processing options. But again, you can just put a flat. Like I've seen people just put a flat 5% to if you want to pay credit card, and it's even more than the actual processing fee, and people will still pay it because they can put points on the card, or they don't have cash, but they just want to do it.
Yeah.
And so they put it on their credit card. So, yeah, that's definitely a really good way to start collecting. Okay. So collecting cash as a sign. Any other signs?
Are you talking about in terms of if the cash is not trending the right way, like looking for
Yeah,
signs
just like
that you
warning
might be
signs that
sliding? Okay.
hey, yeah,
Yeah. You know what? This is a really simple one, but when you get your bank statement, if your balance is down every month from what it was at the starting, is like, hey, somewhere there's a slip. I mean, it's the easiest one in the book, but it's just kind of like, hey, if every month you're 2 or 3 grand lower than you were the month before, then you're basically dipping into
really,
your funds to cover your operating expenses.
yeah. Well, I would say another good one is just looking at your estimated gross margin and your actual gross margin on each project. Because if
Yes.
that's a huge warning sign, like, hey, you're not hitting what your target was, so it's going to trickle down to to where you don't have the cash, right? I think that's
Well,
a really
and
good one as
something too
well.
that can have a ripple effect is if you have a job that was really off base, and so you just, let's say you broke even and you didn't have any profit on it, then you essentially, your overhead for that, the time of that project is going to be cutting in to and reducing your profitability on the other projects down the road. And so just really making sure that you are, as each project is complete, evaluating it. And the importance of that too is because sometimes you're going to have to change the way you do your pricing and the way you do your estimates. If you're seeing your what is actual versus what was budgeted, and you're always about 5% off, is then, hey, you probably need to raise your prices 5% if you want to hit your target number.
Yeah, raising prices will make getting more cash significantly easier,
Hmm.
as long as obviously people will pay what you're raising it to. But you'd be surprised. A lot of it's head trash where you're not raising your price. So,
Yes.
uh, so let's talk about the actual like savings plan. How do we get to that 3 months? We've talked about some strategies for generating more cash, but do you have targets that you typically set with a client? How do you calculate what that target is? How long should it take you to get to the 3 months? Anything that you work on in that regard?
A lot of that's depending on what they're doing right now each month, and then kind
Right.
of some of the strategies we talked about. Because the biggest thing is you, to get your cash, is you've got to cut your spending and you've got to bring in the money.
Right.
Um, so yeah, looking at ways to cut spending, and a lot of that, and I kind of sound like a mother when I say this, is, you know, pack your lunch. You want to talk about saving a lot of money, is if every day is you're, using the company funds to go buy lunch out somewhere, is pack your lunch, make your coffee at home and take it with you. And, so it's kind of some of those simple things that really it adds up when you start seeing, and by adds up, I mean the savings start to add up when you start taking them, making those little changes.
Yeah, definitely. I just kind of I think about it and hey, okay, I'm 3 months. That's what my goal is. And so my cushion, I'm trying to get $60,000. That's my 3 month cushion, right? And so I start putting like I get that account for cash and I start moving money over. But the danger there is I need that cash for operations. Like I can't just pull it out. So is there like, hey, every quarter evaluate your cash position, pull this percentage out potentially, or what like logistically, what's the best way so you don't run into the ground?
It's Well, and it goes back to what we're talking about, knowing your numbers, because it's not only
Yeah.
knowing what your cash position is, but knowing how your jobs are going. Um, and the other thing I say a lot is know your worth. And Khalil, you said
Hmm.
head trash, but if you're delivering a good product and you think, okay, everyone around me is charging X, you know what? If you're better than everyone around you, you charge X plus Y. And you might need to let someone not take you, but know your worth. Like, don't do a project where you're not making the profit that you want to make, because then you are letting go the next project where you could have made that. So, and
Yeah.
I've found, and just in what I do, is when people, um, and I say with my firm is like, we're not the cheapest, but we're the best. And so if you want cheap, then go hire someone who does bookkeeping that has, a little placard on the corner. But it's so don't make your sell about price. Make it about the value that you deliver. And then that way you can really start to increase your profit margin.
So this goes exactly to the point of timeline for projects, as well as the costs of the project. But when you don't know your worth, you try to add value. You try to overcompensate, essentially. Oh, well, we've got to eat that customer concession. They got upset with this. We're just going to do it free of charge, right? And let's throw in this. Let's make them happy, right? And let's add a little bit of whatever to this project. And so then you add cost to it because they're not paying you for it, and you're just adding cost to it. But then also now the project has gone outside of the scope, and you're going longer than originally intended. And that's what's killing your margin a lot. And you're basically giving them your cash. That's what you're doing. And so yeah, you definitely have to know your worth and stick to it, right? Okay.
One thing we had talked about, Khalil, is the gangster loans. Is that I cringe whenever I see someone who's gone and gotten a QuickBooks loan or a Stripe loan, and those will kill your ability to save cash and to be profitable every time. They usually will say they just take a percentage.
Can you describe what they are? Yeah.
Yes. They'll take a percentage of your sales. They won't tell you an interest rate. They will say, we'll just take, 1% of your sales, or whatever the percentage is. But when you go back and calculate what the imputed interest rate is it's like a payday loan. It's shark lending. So, it's quick money because they make a ton of money on it. And that kind of goes back to, we were talking about, that's kind of if you haven't been doing your due diligence and you don't have the cash savings, and because the cash savings really does enable you to, we've talked about cushion, but it enables you to have that safety net so that you don't have to do something like a short-term loan like that.
Yeah.
One thing I tell people about gangster loans, and there are some guys who do that don't like the name gangster loans, but still, I mean, they're legal, right? But there are one place they are used, which is a little bit irrelevant to us, but is when people buy houses, rental flippers and all that, they get this quick loan and they pay ridiculous high money for a couple of months and then get it mortgaged and do that. But where I've seen people use them, which is double quick trip to the grave, is if you're ever borrowing money, especially gangster loans, because you're losing money. Mm-hmm. You're going to be dead that weekend, right? There are people that sometimes, I've just got to float the receivables. I got $200,000 I got to do in payroll, and the GC's out of town in Hawaii, won't pay me till he gets back, but he owes me $400. No, I'm not in favor of that. So Lisa, we're on the same page. But man, they will kill you quickly. And where they oftentimes get used is somebody's under big duress because of losses, and they get the call, and the money's there tomorrow morning, and then they start taking it back tomorrow at 4:00.
Yeah.
So
yeah. Okay. So we've covered quite a bit of things about cash. This has been great. Let's talk about just really easy actions, kind of go through essentially what we've talked about and what people can actually go do right now. And then we can talk about some of the long-term actions they can take. So what's like kind of step one, Lisa?
Know your numbers, know your profit margin, know your overhead.
Okay. And obviously do whatever you can to reduce those things. Review your subscriptions like I did, literally log into every single account, look at the tiers, look at what it costs to downgrade, look at can we remove seats, look at if we can switch people to ACH billing easily, whatever it is, look at all those costs and see if you can and get them down. Insurance, call your broker, see, hey, is this the best rate available? I was about to go call somebody, but just wanted to check. And see if you can get
shop
that down.
those. Insurance has been going up, and I just think it's so important to shop the rates.
Yeah, we're doing that right now. Okay, so those are some things that you can do to get your overhead down. As far as knowing your trying to allocate your overhead to your jobs. I don't know if we really covered exactly how to do that. Is it a percentage that you should take? How do you calculate what you should be charging or adding to the bid essentially?
So what I look at is knowing what your overhead percentage is. And then when you calculate your profit per job, what you want to make on that job is just make sure that you have enough to cover what that overhead is going to be and still leave you with net income from that project.
Well, how would you actually calculate that overhead percentage? Are you saying like, okay, I have this project manager who is salaried. How much time is that project manager spending on that job?
So if it is the project manager's time spent on that job, that would be the cost of labor. So that would be above the line. It would be specifically allocated to that project. The overhead I'm talking about is more if you have like an office manager, it's your insurance, it's your subscriptions, it's what you have to pay to run the company. And what I look at that, Khalil, is run a P&L. You could do a rolling 12 months, so you can just kind of see the last 12 months. And then look at it as a percentage of your income. And so then when you look at what your operating expenses are, your total operating expenses as a percentage of the income that you've brought in, that gives you what your overhead percentage is.
Gotcha. So get your overhead percentage. Okay. Percentage
Yeah.
of total revenue.
Yep. Look at it as a percentage of your income. Yeah.
Okay. Gotcha. And then take that percentage and
revenue.
apply that to your bid, essentially.
Uh-huh. You just want to make sure that your profit from that job is large enough to cover that percentage and then still have your net profit number.
Right.
You brought up a good thing with the labor, and this kind of goes to know your numbers, is to really take and know who's working specifically on that project and having that labor amount allocated to the project. Because I see a lot of people who just put their supplies to their project cost, but they're not thinking about the GC that might just spend a few hours, but that still needs to be allocated to that project. That all of those labor costs need to hit that project.
And the cool thing about right now is that's pretty easily done. The guy I talked to before we got on for this podcast, we're trying to allocate labor to projects, and their QuickBooks will do it. There are all these apps that'll do it. They don't cost very much. And people keep their own time, and they have to know which job they're working on.
Yeah.
And you can do job costing. It's outside of your books, but you look at that job, and this is what we actually spent. Well, it's in your books, but I mean, you split out to look at it. Yeah. And that's more important than anything else. Understand, am I making money on this job? And then the only place where I do it a little differently than Lisa is, if we have a job, we have to have enough margin to cover overhead. Absolutely. But sometimes that means we got 4 jobs, and combined, they cover it, right? So anyway, so that's the only place we think a little bit differently. I just think total amount I got to sell at that margin to pay all that overhead. But essentially it's the same thing. You're not making any money just because you did a job. You got to take the money that you made on that job, pay your overhead. If there's anything left over, you might have made some money.
Correct.
Yeah.
Correct.
Okay. Another thing we said, if you are in a good cash position, go flaunt yourself to all the bankers in town. Is that the term? Just start going to all the free lunches and all the is that
get to know
what they
your
should be
banker
doing?
friends. Yes.
Yeah.
Something that Khalil, we had talked about is, it might not have been you. This was a conversation I was having with a client. And so like, well, when do I finance a car or when do I pay cash for it? Kind of knowing how to make that decision. And that kind of lent itself to, what do you want to do with your cash? Because it's easy to get a loan for a car, even though the rates are pretty high right now, but it's really hard to get a loan to cover operations. And so when there's not an asset that can be used as collateral for the loan. And so that's just kind of something to think about as you look at what your long-term plans are is, yes, you might have cash to pay for that car, but if you want to invest that in the business somehow, it might be better to take a loan for that so that you've got that cash freed up for other things that wouldn't be as easy to get a loan for.
Yeah, that's a good point. Hadn't thought about that with where rates are right now, but yeah, finance the car.
I know they're high. It's high for cars. It's, it's even higher for like a line of credit, and it's almost impossible for someone to get an operating loan if they're, struggling right now.
Yeah. Interesting. Okay.
There are some people I know that will do where they do a loan against receivables. So that can definitely be done, but it's not, it's just it's a little bit more cumbersome and the rate is higher than what you'd be paying on a car loan.
Okay. Well, I think there's a lot of different things that apply, and it's so hard to say what the next action is because it's so specific to where you're at. And if you don't know where you're at, I think probably one of the first actions you should take is to contact someone like Lisa. How can people get in touch with you, Lisa?
Head to my website. It's Paxus, CPA, PAXUS, CPA.com. And there's information about us and the services we provide and email to contact there.
Okay, excellent. Well, we will put that in the show notes for everybody.
Fantastic.
This has been a lot of fun, Lisa. Thank you for joining us amidst all of the issues with recording software and all that kind of stuff. We appreciate you powering through and providing so much value to our listeners.
Thank you for having me. I love your podcast and I learn a lot, and I work with a lot of contractors, and it helps me to kind of know some of the struggles that they're facing. Since it's a different industry than what I'm in, I enjoy the advice y'all give out.
Well, great. Well, we appreciate you, and we'll definitely be seeing you around.
Sounds
Bye,
good.
Lisa.
Take care.
Bye, guys.
You made it to the end of the episode, but before you go, if you found yourself thinking about growing your construction business while listening today, I want to share something with you. It's called our 24 Things to Hiring and Training the Perfect Executive Assistant for Your Construction Business. And it's a free guide that we've created. It's not theory. It's what we actually use to help contractors hire the perfect executive assistant. And really, we help you find ways to delegate over 50% of your current workload and get back 20 hours of your time every single week. You didn't start your construction business to just be doing admin work, to be buried in paperwork and endless admin tasks. This is the guide that shows you exactly how to find and train someone who can actually take all that weight off of your shoulders. So this is a real actionable, great PDF that has templates and processes. It's really, really great. And I want you to check it out, even just to get your feedback and how we can make it even more valuable. But I know that you're gonna love it. The link is in the show notes. Please download it. We'd love to see how much of an impact it makes on you and your business. Thanks for listening to the full episode. Check out the guide. It's free. No reason to hesitate. No reason to wait. Download it now. And before you go, I just want to ask for your gracious subscription to our podcast. So if you have 2 seconds, it means the world to us. Just subscribe on YouTube, Spotify, Apple, or if you'd like our weekly newsletter delivered to your inbox whenever we release an episode, please subscribe in the show notes. Every week, we're talking about real strategies on how you can grow and build a profitable construction business that runs without you, so you can have less stress, more time, and more money. Click subscribe wherever you listen to the show, and thank you again for checking out the Cashflow Contractor. See you on the next episode.